The US government is trying to fully ban crypto in a way they thought was subtle, but has now come out as a full blown attack against the industry. This is your Altcoin Buzz news. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin returned to nearly $29,000 yesterday as bulls ignored news of a fresh United States regulatory crackdown. The Bitcoin USD pair kept the volatility coming as the dust settled on the prior day's interest rate hikes and associated commentary from the Federal Reserve. Despite Fed Chair Jerome Powell giving mixed signals over how and if rate hikes would continue, crypto market commentators argued that the sudden drop that Bitcoin witnessed had been over the top. The mood even managed to stay positive despite news that U.S. regulator Securities and Exchange Commission had begun targeting crypto firms, notably Coinbase, the stocks of which fell nearly 20% at the Wall Street Open. The reported arrest of Do Kwon, founder of the blockchain firm Terraform Labs, responsible for the 2022 Terra implosion, likewise failed to dampen the performance. Michael Van de Pomp, founder and CEO of trading firm 8, summarized, "We're still in the vacuum of relief, the echo bubble, the period where the potential process of pausing hikes remains to be bullish, and there's no clear recession until reality kicks in." Zilliqa is a public permissionless blockchain that is designed to offer high throughput with the ability to complete thousands of transactions per second. It seeks to solve the issue of blockchain scalability and speed by employing sharding as a second layer scaling solution. Zilliqa has just announced they are launching EVM compatibility on the mainnet on March 25th. The Ethereum Virtual Machine is the software platform used to build applications on Ethereum and other protocols that have implemented EVM compatibility. Bringing EVM to Zilliqa opens the ecosystem to the wider blockchain developer community and allows users to use the popular wallets such as MetaMask with the Zilliqa ecosystem. Once this EVM implementation launches on mainnet, users will be able to transfer native ZIL using wallets such as MetaMask and deploy Solidity smart contracts using popular developer tools such as Truffle and Hardhat. Going forward, EVM compatibility will expand to include full interoperability between Zilliqa and Solidity smart contract standards. They say that this is a full, complete implementation of EVM compatibility with all APIs, and most of the dApps will not require any adaptation at all. They say we have a better implementation than many layer 2 blockchains because one of the things that we've decided is to make EVM native to the Zilliqa ecosystem. You can buy, sell, and trade Zilliqa on Binance US. You can also earn up to $500 with your trading. It's simple. The more you trade, the more you earn. We partner with Binance US to bring you guys this offer. All you need to do is create an account on Binance US today. Just click the link in the description below. The blockchain analytics firm Sentiment tweeted this morning that many altcoins have experienced several transactions recently, which are among some of the biggest of the year for their respective networks. According to the tweet, Polygon and Fetch AI have both seen a transaction valued at over $40 million on their networks. The tweet also added that investors and traders should keep an eye on Decentraland Mana, Dia, Immutable X, and The Sandbox after they hosted some big whale moves as well. Litecoin emerged as one of the best performing cryptocurrencies on March 23rd, surpassing its top ranking rivals, Bitcoin and Ether. The Litecoin price rallied 5.5% to reach an intraday high of around $92. In comparison, the total crypto market cap has risen 2.5% to $1.14 trillion, with Bitcoin and ETH rising 1.7% and 1.2% respectively. One reason could be that Litecoin has relatively underperformed the cryptocurrency market in March, dropping over 6.5% month to date versus the crypto market's 9.5% gains. Traders likely saw this as a buy the dip opportunity for Litecoin, with more upside potential, particularly as there is little to no other notable catalysts. Meanwhile, on-chain data shows a rise in the Litecoin supply held by addresses with a balance between 1 million and 10 million Litecoin in March. Previous halvings in Bitcoin and Litecoin markets have preceded extended bull runs, therefore the next Litecoin halving scheduled for August could also produce a similar bullish outcome. Independent market analyst Rec Capital noted that the euphoria around the Litecoin halving may have influenced traders to buy Litecoin in the face of a market-wide dip. The U.S. Securities and Exchange Commission's notice to Coinbase that is likely to be accused of breaking securities laws could foreshadow an agency effort to break the back of the crypto sector as we now know it. But at the same time, it may also finally force court rulings that define how the industry can move forward. The so-called Wells notice informs Coinbase about the looming potential enforcement action is sparse on details, but it said that the next steps could bring injunctions and cease and desist orders against aspects of its business, which include its staking service and some of its asset listings. Since the company has already announced its intention to keep going, such legal orders will likely be fought in court, where judges may finally settle the questions the industry has previously hoped the SEC would answer. Cases need to get before judges in order to get clarity on when the tokens become securities and when the trading of tokens requires registration as an exchange. The SEC bringing action against Coinbase is a long-term positive for the space. Neither the regulators nor the sluggish U.S. Congress have so far produced any sector-specific rules of the road. Coinbase has so far signaled that it intends to take the SEC to court, saying, "We remain confident in the legality of our assets and services, and if needed, we welcome a legal process to provide the clarity we've been advocating for and to demonstrate that the SEC simply has not been fair or reasonable when it comes to its engagement on digital assets." End of of course, the 3-year battle between the SEC and Ripple possibly approaching its conclusion demonstrate that court cases can stretch out for years, and appeals can make that even longer. Though the SEC signed off when Coinbase became a public company with its same business model in 2021, the agency's lawyers have slowly built a case against the exchange. Though they hadn't yet directly confronted the public company, enforcement cases established an agency view that unregistered securities have been traded on the Coinbase platform, potentially supporting a case that the company is operating illegally as an unregistered exchange. The regulator has also pursued crypto staking as another category of unregistered securities, possibly leaving Coinbase vulnerable on that front as well. SEC Chair Gary Gensler has been threatening that the runway was getting short for firms to comply with the rules that the industry says are fundamentally at odds with how crypto works. Gary claims that crypto tokens are generally securities apart from Bitcoin. If registered exchanges can't trade unregistered securities, such crypto platforms would stand empty. So the industry has so far maintained a standoff in which many advocates of virtual assets argue Gary Gensler is setting an impossible task as a means to kill US crypto. The Coinbase development is ratcheting up that open contempt, saying the SEC has abandoned its mission of protecting investors and is using fear tactics to effectuate a political power grab. But rather than waiting for formal authorizations from Congress to approach digital assets on a tailored turf, Gensler has chosen to use existing laws to treat those businesses exactly the same as traditional financial firms, steering their behavior with enforcement actions. The SEC also issued an investor warning on Thursday, less than 24 hours after its Wells notice was received, advising that people who put their money in crypto should be prepared to lose it all. The alert said that investors may not benefit from the rules that protect against fraud, manipulation, front-running, wash sales, and other misconduct when intermediaries for those products do not comply with the federal securities laws that apply to registered exchanges. Coinbase executives took to Twitter on Thursday where over 3,700 people tuned in for a live session to hear the company's complaints. CEO Brian Armstrong ended it by encouraging people to sign up to the political organization it started, Crypto 435, that is meant to lobby members of Congress in support of digital assets. Nick Carter recently wrote another post on Operation Chokepoint 2.0, which lays out the case that the Biden administration was quietly trying to ban crypto. In his latest blog post, he writes, in January 2023, it became clear that a new chapter had opened up in the Biden admin's war on crypto. Some in the crypto space noticed highly coordinated activity between the White House, financial regulators, and the Fed aimed at dissuading banks from dealing with crypto clients, making it far more difficult for the industry to operate. This is problematic because it represented an attempted seizure of power far beyond what's normally reserved for the executive branch. And it wasn't just banking regulators either. In the last month, regulatory attempts to kneecap the crypto industry in the US has escalated dramatically. For example, the SEC announced a lawsuit against the crypto infrastructure company Paxos for issuing the BUSD stablecoin. Crypto exchange Kraken settled with the SEC over offering a staking product. SEC Chair Gary Gensler openly labeled every crypto asset other than Bitcoin a security. The Senate Committee of Environment and Public Works held a hearing lambasting Bitcoin for its environmental footprint. The Biden admin proposed a bill that singles out crypto miners for onerous tax treatment. The New York Attorney General declared Ethereum the second largest crypto asset a security. The SEC continued its anti-consumer protection efforts by doubling down on their attempts to block a spot Bitcoin ETF, as well as trying to stop Binance US from buying the assets of bankrupt Voyager. And most recently, the SEC sent Coinbase a Wells notice, indicating its intent to bring enforcement action against them for a variety of their business lines. So yeah, that is all the FUD that has happened in just the last few months. But what do you guys think? Is the government trying to take down crypto, and will they succeed? That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.